Welcome to today's meeting. So today we'll be talking about structure, just like our previous class. So we talked about the idea of a weak low. So when market consolidate before buying, we call it what? Weak rejection. We call it what? Weak rejection. When market consolidate before selling, we call it what? Weak rejection. But when market give a sharp move, a V form, inverted V form, we call it what? A strong rejection. We call it a strong rejection. And we talk about our major low and major high. Now, after a major low is being taken, market is expected to create what we call range structure. It's expected to create what we call range structure. So after creating range structure, we expect market now to come and what? Test the former structure range to take this range structure or go into the former range then before creating a major low. So this is what we explain as our range structure. This is what we call a range structure. So why this is our major low, major liquidity, external liquidity, major liquidity, external liquidity. So this is the idea of structure, of understanding of what structure. This is the major idea of understanding of what structure. This is the major idea of understanding of what structure. So this is how price move in terms of what structure. This is how price move in terms of structure. So if you notice from this very area, we had a break of structure from here. So since we have break of structure to the upside here, market did not come back into the range. Market did not come back into the range, despite the fact that we are on a daily time frame. Market did not come back into this former range to create a higher high before creating a higher high. That means we are still within this former range. That means we are still in uptrend, but market has not yet proven that what we are continuing like this. So we can easily see something after price give us this move, give us kind of this move, then before a higher high. So this means that from here, this where we have a major structure, this lower, a higher high, higher low, that's lower low, then before a higher high is our main structure. So why the remaining ones around this area is what we call range structure. So from here, higher high, higher low, higher high, higher low is what we call range structure. So that means we are within this range structure. So if you notice within the range structure, this was the last area we broke structure on the range structure area. On the range structure area. So we broke structure around this area, on this range structure area. On this range structure area. So we broke structure. Normally, if we understand about liquidity, we understand that the price is coming what here. Price will take this low based on liquidity. But based on market structure, we are not expecting market now to take this low yet, based on what we understand about what market structure. So even if we are what forming a range structure in an up move, even if you are forming a range structure in an up move, we don't trade against it until what market validates it as what a minor BMS before you can expect what a higher low, then a lower low into the former range, then a continuation of the buy move to join the former trend, to join the former trend. So this is where we have what a major BMS, a major BMS. So these are range structure. These are what range structures. Before market would give us what a higher low to create a higher high, to create a higher high. So that is the basic idea of understanding range structure and all. That is the basic idea of understanding what range structure and all. Now, since this is our higher high, higher low, higher high, higher low, that means we are still in uptrend till what market proves us otherwise. Till market proves us what otherwise. So from this high, based on range structure, this is our external liquidity. Why this is our what major liquidity on this range structure area. The market is what giving us. So market has not yet what broken this low yet. So that means we are still what in uptrend till what market proves to us that we are what on downtrend. Till market proves to us that we are what on downtrend. See, market proved to us that we are what? On downtrend. So initially, this is where market failed. Though after breaking this high, market is supposed to use that same momentum without breaking this low to create a higher high. So when price was selling, this is where we have what? A minor breakout structure around this area. This will have what? A minor breakout structure. So that is the normal idea of understanding structure. That is the normal idea of what? Understanding structure. This is the normal idea of what? Understanding structure. This is the normal idea of what? Understanding structure. So from this area, you will notice that this is now our swing high. Why this is our swing low? Swing high, swing low, swing high, swing low. So that means we are trading within this range. Even if we use of Fibonacci from this low to the high to note your 50% range, we are being what? In buy zones. That is why price has been consolidating for a very long time now. Excuse me, let me check it more. Okay. So that is why price has been what? Consolidating all this while on this daily time frame. On this daily time frame. That's why price has been what? Consolidating on this daily time frame. On this daily time frame. So you trade what price gives you, not what you are thinking. You don't trade what you are thinking. You trade what price what give you. So you don't use your normal idea to kind of what you are thinking to trade structure. So you trade what price is what showing you. So that is that. Now we have what we call in structure understanding. We have what we call complex and what deep corrective wave. And there are some areas where we do what have that moves. There are some areas where we do have that move. So after market creates a, let's say we are on downtrend, lower low, lower high, lower low, lower high, all of them are giving good corrective wave, take internal liquidity and all. So now lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now let me add little range structure so that it looks better. Now at this point, this is our structure range. Lower low, lower high, lower low, lower high, lower low, lower high, then a lower low, a higher high. So we have what we call a BMS to the upside, a break of structure to the upside. So after this break of structure, you notice price did something like this: a higher low, a higher high, a lower low, a higher high. So you notice price did something like this. Now after this BMS, we call this type of move the market try to manipulate this low. The market would try to manipulate this low. We call this type of move a complex structure. We call this move a complex structure. This move, we call it what? A complex structure. We call this move what we call a complex structure. A complex structure. That's what we call what? A complex structure. Now we have what we call deep corrective wave. Now when we call it deep corrective wave, is when market, this one did not test any level around this area, didn't test any level before giving us this high. So you have something like a range structure around this area, then it gives us what? A deep corrective wave instantly. It gives us what? A deep corrective wave to the former range to take internal liquidity before creating a higher high. We call this a deep corrective wave. So this is the leg of that deep corrective wave that happened. This is the leg of what? Deep corrective wave that happened after BMS. Market came to what? Give entry. So this leg of entry is what we call a deep corrective wave. It always happens within price. So it always happens within price. Now we have a new BMS to the upside. So after a new BMS to the upside, now let's say for example market give us something like this again. Let's say for example market give us something like this. Market test this area, create a higher high. We call this a shallow corrective wave. We call this a shallow corrective wave. Why do we call it a shallow corrective wave? because market only tested something like support turn resistance without giving what a deep move. Market only tested what something like support turn resistance, so without what a deep move. So without that deep move, we call it what we call shallow what corrective wave, or shallow pullback, or shallow pullback, or shallow pullback. Note, this complex corrective wave, deep corrective wave, can also happen within range structure. So let's say you are seeing this range structure around this area. This range structure is happening on daily time frame. If you go to H4, you will still see range structure within that range structure. I don't know if you're understanding me. So you must understand what we call time frame difference. You understand the higher time frame before you understand the lower time frame. You understand the higher time frame before you understand the lower time frame. So you must try as much as possible to understand the higher time frame and the lower time frame. So that is that. Now look at this. After market give us here, you notice that after a higher high, a higher low was formed. A higher high was formed. Market start creating range structure. Create range structure. Create range structure. Create range structure. Then a BMS. So after BMS, instantly it gave BMS. It start creating another range structure without going back into the former zone to give what a deep or what a complex wave. A complex wave. Or going back to give what a complex wave. So after that, because this is the area we have a BMS in this range structure area, based on this time frame, this is where we have what a BMS. So after that, market now use this leg to give us what entry method. Market use this leg to give us what we call entry method around the what support turn resistance area. Around this what support turn resistance area before creating what a lower low. Before creating a lower low. So this is what we call kind of a deep corrective wave. Why? Because there's no manipulation. Here is very clear that it came now to test support turn resistance. So this is example of what deep corrective wave. This example of what deep corrective wave. So this is example of deep corrective wave. So after the deep corrective wave, market creates a lower low. You will notice here a lower low, a shallow corrective wave without going back deep enough before creating a higher low or a lower low. So it gives a shallow corrective wave, just like support on resistance again, before creating a lower low, before creating a high. So this is what we call a shallow corrective wave. That is what we call a shallow corrective wave. Now, when you see something like this, let's say on something like here, higher high, higher low, higher high, range structure, range structure, range structure. Now, this is also example of what complex corrective wave. What did market do? After market break structure, from range structure, it created another range structure. From range structure, it created another range structure before creating a higher low, creating a higher high, and create a lower low. So you see that it kind of give a fake BMS on both sides before giving a real BMS. So from this former range, you will understand that this leg did not go deep enough into this former range before creating a higher high. Did not go deep enough into this former range before creating a higher high. Now, when we'll be talking about liquidity, you will understand all those parts clearly. So before creating what? It did not go back into the former range before creating what? A higher high. So that is why this one now came to what? Failed that rule for smart monies to join the buy move, to trap early sellers, So after taking them out, then they'll be frustrated. They'll be looking to join the buy again from here. Since market has break structure to the upside, they will be looking to revenge at this area. So when market come back, market will break structure to the downside, then and start creating a lower low. So this time, since market has already hit their stop loss twice, there will be weak to enter trade. There will be weak to enter trade. there'll be what we call, there will be week to enter trade. So that is the normal idea of understanding complex, deep, and what shallow corrective wave. That is the normal understanding of what, that is the normal idea of understanding shallow, complex, and deep corrective wave. So this is the foundation of what structure that you need to what understand. This is the foundation of what structure that you need to what understand. This is on the foundation of what structure that you need to what understand. So this all for today. Just like I said, we are just taking it what little by little. We are not in a rush. We are not in what in a hurry. So when it's time for you to what to learn about liquidity, you will learn it. When it's time for you to learn about model, you will learn it. Time for structure is mainly for structure. We won't add anything apart from that. So take care. Goodbye. Good.